Before we get into what Fed Jerome Powell just said at his highly anticipated Wednesday speech, let's dive into AMC and what is currently going on behind the scenes with the data and with the chart, guys. So let's get straight into it. And as you guys know, if you watched the video that came out earlier today, the data just keeps getting better. The short interest continues to go higher over the last couple of days at a higher degree or a larger degree than what we have seen over the past couple of weeks. Days to cover continues to go higher. Cost to borrow rates continue to go higher. So the data is looking in the right direction for anyone hoping for a short squeeze. And a lot of this is going to depend, especially if we get a rally over the next couple of days, on how the markets are going to digest what Fed Jerome Powell just said. Now, if you guys have not seen the video that was posted earlier today, let's give you guys a brief recap. And we did have the ADP employment change, which came out, and this was very positive for the markets. The markets didn't necessarily take it that way due to the external factors and obviously Fed Jerome Powell at 1:30 today. But private hiring only increased by 127,000 jobs in November, well below the estimate ADP reports. And the estimate was 190,000 jobs. So you came in like 53,000 jobs less than where we were supposed to be. Or is that 63,000 jobs less than what the estimate was? And you added 239,000 jobs last month. So you're starting to get closer to this negative jobs report that I think the markets are really looking forward to as of right now. But when you break down this ADP report, there was massive losses in certain sectors, and manufacturing lost 100,000 jobs, Professional and business services lost 77,000 jobs. Financial activities lost 34,000 jobs. And information services lost 25,000 jobs. Good producing industries overall saw a decline of 86,000 jobs, while services firms added 213,000 on net. So when you get into the numbers, the leisure and hospitality is really the only thing that is holding the jobs reports in positive territory. Without the leisure and hospitality sector gaining 224,000 jobs, you would have been well in negative territory by, what is that, 34,000 jobs for the month. So you're definitely getting closer to a softening labor market, but keep in mind you're still adding 127,000 jobs, which is still a lot to be adding month over month, especially when the Fed is raising rates so aggressively. You are also seeing Elon Musk, and he is coming out and saying that essentially the Fed needs to cut rates now or we are going into a deep recession, and he says severe recession. And I think this is partly playing into the markets as of right now. If you do look at the yield curve inversion between the 2 and 10-year bond yields, you are inverted 74 basis points. This is usually a precursor to recessions, and this is the most inverted level that you have been at over the last 40 years. So this has all been, a very negative thing that has been weighing on the markets. And Fed Jerome Powell just said some things that are also a little bit of mixed, right? We'll talk about it in just one second. But if we take a look at the Ortex data, you could see the live short interest off free float is sitting at 21.38%, up about 0.25% on the day. 110.2 million shares that are currently sold short. Cost to borrow average of 51.38%. Cost to borrow max of 71.19%, and cost to borrow minimum of 43.38%. If you take a look at the days to cover, that is up yet again today at 7.17, which is a lot, right? Anything, over a couple days is typically a lot. Once you get into, almost double digits, that could put a lot of pressure on shorts alone. Free flow out on loan sitting at about 35%. Shares out on loan at 180.27 million. On a technical basis, AMC still looking very strong above the 50-day moving average, even though we are down about 5% at the time of recording this video. If we take a look at bond yields are going up just slightly today. And the dollar is up slightly today as well, giving us a little bit of that bearish tilt that we are seeing with the S&P 500 down about 0.08%. Now let's get into what Fed Jerome Powell is saying. And he's basically saying the same thing that we have heard, that they're going to have to raise rates higher, keep them in restrictive territory for longer. That's number one. He did say, which was new information, that the terminal rate likely to be slightly higher than what was indicated on the SEP report. That was back in September, and basically markets were expecting 4.6% was the terminal rate based off of the SEP rate. Now the markets, the Fed swap rates, are pricing in 5.05% for the terminal rate, and that's the rate the Fed stops raising rates at. And that's pretty in line with what Fed Jerome Powell just said. He said slightly higher than what we seen in September. So this move that you are seeing, this bullish reaction, looks to be just the markets were expecting 5% terminal rate. It doesn't look like we are getting indications that that is going to be higher. Who knows? This conference is going on for a while now, and you might get new information coming out. So do keep that in mind. There could be something else that does come out that could move the markets, but overall, this is largely what the markets have been expecting and what the markets have already priced in. One new thing that Fed Jerome Powell did say as well, he said that after, well, I should say first, he said we should be very cautious on getting too optimistic about inflation coming down just for the month of October, because he said that when you beat on CPI 1 month, the next month tends to be pretty bad, or at least the following months. And that is obviously coming from the August inflation report, in which was really good, and then the subsequent reports were really bad. So that did give the markets a pretty fat candle to the downside, but nonetheless the markets are eating up what Fed Jerome Powell is saying until we get new information that is not priced into the markets. The markets might just continue to rally from this moment on, guys. He does say still that we have not seen enough evidence that inflation is coming down. They're going to keep their foot on the brake to slow down the economy. He also said that essentially you don't have to see unemployment rise in a big way. You could just see the job openings come down in a big way to get to this balance in the labor market, guys. So I do apologize for the shorter video than usual, but there's not too much else to actually be said. As far as economic data coming over the next days here in the markets, for tomorrow, you are going to get, let's go ahead and see, it's going to be December 1st, and you are going to have personal spending month over month, personal income month over month coming out at 8:30 in the morning, ISM manufacturing PMI for November coming out at 10 o'clock in the morning as well, guys. So that is it. Thank you guys for watching. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys enjoy the rest of your day, and I will see you in the next one.